Hello everyone, LA Little here, and this is your daily NeoTA wrap. We take a look at these markets and we do it from a neoclassical perspective, each time asking ourselves what happened today and what does it tell us about the coming ones. We do the show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube under the channel LA Little. Catch it there, subscribe. Anytime content's pushed, you can be notified. Very easy to do. Just pop over to YouTube and look it up and subscribe. As far as these markets, they have subscribed to larger numbers. We've got the Russell telling us a story again. It was actually up on the day, but we had nice big gains everywhere, over 1.5% on the NDX. NDX was the leader all day long, refused to back down at all. We had sell-offs pretty much everywhere else, including copper and oil. Oil down 4%, 0.83 on the USO. Dollar was up again, just slightly. No big sell-offs other than copper and oil. The rest of them were pretty much sideways. Nat gas got a short covering bounce today, but elsewhere not much else to talk about. The real story was in the indexes, and definitely in the indexes, because the indexes finally jumped over that range. Remember, we've talked about kind of two ranges. We've been watching this area, as kind of a precursor to the potential to go after these highs if we break to the top side. And today, we actually broke and held over those two swing point highs. So that's a break on multiple swing points on this time frame. And that's a big deal. And the reason it's a big deal is because it gives us some insight, right? People were willing to pay up and to continue paying up as they got to higher price. That hasn't happened for a good 6-7 weeks now. This is the first time we've seen it happen. If this pushes a little bit higher tomorrow, then definitely something has changed. Now, if it has changed, one of the things we're going to see is just what I talked about when we were doing the weekly wrap on Sunday, and that is that we're going to get the potential for an ABCD structure to the upside, breaks of these swing points, breaks of that one. This could extend quite a ways, not only from an ABCD structure, but also just from the range itself. If you take and duplicate that range up, fairly large. Big breakout today. If it holds, get another bar or so underneath the belt, it's going to be a big deal to the upside. If we look at the NASDAQ pushes over the swing point high as well. So you get a break of this swing point high, you've got two more swing point highs sitting up there just above, and you've got a weekly swing point high that's already printed that's also sitting up there. So you break over this one today, right? NASDAQ, the composite, going for the swing point highs up here now. It's got a nice push going. Also, with today's move, it does have an ABCD structure on the way up. NDX looks about the same. A little bit weaker than the NASDAQ in terms of price, but getting its push, it's coming after that swing point high tomorrow. If you want confirmation, you want to see this trade over the swing point high. It's just above, not very far to go. That would be confirmation that in fact it looks like a full-fledged breakout taking place. And if you look at the Russell, now remember the Russell had broken out. It was the earliest to break. Broke out last Thursday, held that breakout on Thursday and Friday, came back yesterday, but today reverses and closes back over it. Another ABCD structure formed here, right, that has the potential to go after the swing point high. So when you look across the board here, all of them are making their moves, all of them starting to really subscribe to this ideal that this market once again is going to work higher despite all the issues that are out there. If we look at the major sectors, we're starting to see some nice movement here that supports that same notion. And what we're talking about is we're talking about a swing point high here and here on the SOX. Takes them both out today. Multiple swing points on this time frame. You got several more to go after now. The SOX starting to make its move. to the upside. If we look at the XLF, which has been toying with this, actually it's a retest regen on a bearish note. It has been toying with it over and over. It did it here, it did it again here, got over it, back under it. Tonight, it's actually going to close right at or above it. Let's see what the ending number was. 24.17, closes at 24.21, so closes over it. Get another bar in your belt. Again, ABCD structure to take it to the upside. And the XLK, which was the other one that was key to getting this market to go higher. Swing point high here, that price point 41.64. This one 41.62. Where do we close? 41.65. You break over them, you have more volume, you're pushing new highs. This market starting to really gather some momentum to the upside. We could look at some others, but in general, what I just showed you is in fact a good synopsis of what is happening. If we look at overseas, CACs in Europe still holding at the highs. If we look at the DAX, now the DAX came down harder, but still held those highs. Had lower volume today, under, over. This thing's going to try to go back to the highs. If we go to Asia, Hong Kong still hanging at the highs. The 8 shares in China still hanging at those that higher range. If we look at Taipei, that's a little bit of a pullback. Let's go to the Nikkei. Nikkei still holding up there. And then finally, if we look at the where is the FTSE? There's the FTSE. Let's see what the FTSE looks like. And the FTSE's hanging at the high. So overseas markets not telling us anything different, but certainly not telling us anything bad. If we go to the currencies and look at the currencies, FXE looks like it's going to try to come back and test that low. If we look at the FXY, which is the Japanese yen, that one also coming back in to test the lows. The dollar's still hanging there, but at least it's a consolidation. It's not a continued ramp higher. The one thing that was pulling at this market today was oil. I did a video this morning. If you care to watch it, you can pop over to the site. I'm talking about the energy stocks and that you shouldn't get too excited about them yet. It's going to take a long time for this thing to build out. Well, today it came back in about 4.5%. It's just, you've just got a lot of resistance and you have oversupply, and it's not like this thing is going to correct itself overnight. So it's a pipe dream to think it is. Yeah, it can put in a base. Yeah, it can even bounce more, but it's going to take a lot to get this thing to go anywhere near where it used to be. So energy markets, and the good thing about it now for the market's perspective is just like we've talked about on the dollar. If you can just build out a range and you don't start plunging down here again, the market has already priced it in. It's not a new number anymore. It's only when you start seeing it blow out the bottom and just start plunging that the market's going to worry. At this point, it's already priced in. It's not an unknown anymore, and that makes a big difference. And if we look at the bonds, they came back in again today. Bonds, as we talked about last night, they're trying to get back into the swing point high on the weekly, 127.68. Still trading above it, 129.71. That's another $2 to get back into it if it gets there, and it does look like that is the target. If we look at the gold and silver markets, they're just hanging now. With a strong dollar, with a stronger market, it makes it harder for people to go put their money into these rotation themes that they were doing to start the year. Both of those pulling back some. Finally, if we look at the continuous commodity index itself, it also starting to pull back a little bit with oil. This one also appears as if it's going to try and just base. Okay, so that's what it looks like in the first 10 minutes here. Give you a 10-minute wrap. Let's take a second. Okay, here we go. So let's take a look at the viewer questions. So if we take, let me pop this up here. Sorry, hang with me just a second. All right, here we go. So one of the questions has to do with Apple. And the question, let's read the question actually and get the right answer for it. It says Apple short-term and mid-term. We got option expiration 220 on both of these guys. And we're on 210, so about 10 days out. So Apple today breaks to a high. Now Apple has been playing with a swing point high for quite a while here actually. You know, this consolidation is about a week and a half old, and that swing point high has been trying to get over, and it did get over it last week, but it really hasn't been able to, to really move higher off of it. Was there. Today, clear breakout, volume expands a little bit. That's the sort of thing you want to see. Apple had an ABCD structure that had already pretty much played out. That was probably why it was taking so long to do anything here. So in the meantime, while it was doing that, it went off and created another one, and that other one was here, and that's the one that's in effect now, and it's going to take Apple up into the 130 area in my opinion. If we look at it on the weekly, here you've got the breakout over the swing point high if it holds. So if you draw that across, you can see that break here, ABCD structure in place as well, would also project up into that 130 area, I believe. So let's get the numbers on it. We got 95, 119, so that's roughly 24. Onto this would give you about 128, 129. So that's probably the target for Apple on this move. Moving to the next question, has to do with the ETF for China. It's called Asher, ASHR. It's the Dutch X Trackers Harvest. It's the China A shares. If we look at this one now, this one's a little bit different, in that it already had a huge run. And so what it's doing at this point is simply consolidating. And that consolidation is a fairly wide price point, if you will. We can take the low of it here, which is 33 roughly, to the highs, which is about 38. So that's about a 15% consolidation range. A lot of volume, a lot of volatility in it. And that's because it moved so far so fast. So a consolidation here makes a lot of sense. It's what you would expect. Now, since this trades off of China, you get a lot of gaps, right? And so the gaps really don't mean anything here. But this range, it's been going long enough here to set out this range. And you kind of got two, let's try that again. You kind of got two equidistant ranges, one inside the other. You can kind of see the middle there. It's in the lower half, trying to get back into the higher half as we speak. I saw China today poured some more money into the system. I wouldn't be surprised to see this one actually try to push back into the top half. Where's it going to go? Well, when you make this kind of a run, if you just take the numbers, and we'll just go back to, let's just go back to December, actually November. So the breakout started in early November, and if we just take the price point late October, which was 24.77, and you push that to the highs 38. So you roughly did $14 on a $25 move, a $25 ETF. So as you can see, that's more than 50%. That's a huge move. That's going to take a while. This kind of volume escalation is going to take a while. I suspect this thing is range bound in this top 15%, for now. And then once it range bounds long enough, then maybe it can make the rest of the move. If it can't, of course it will roll over. But right now, you've got to go with what is the trend, and the trend of this one's clearly up. I think your top side right now is probably the top of this, And so far it's shown you that this price area in here is good support. So I think you're range bound. You want to trade inside that range, buying near the bottom, selling towards the top as it builds out. Okay, so let's go and look at the final thoughts. Okay, so on the final thoughts here, if we go back to taking a look at the general market. So I've said for quite a while now that the weeklies, the intermediate term time frames have been holding, right? That retest regen that's here on the weekly has held each and every time it's been tested, and it's been tested repeatedly. That kind of hold is the sort of thing that you're looking for to tell you if this thing's going to break higher or not. Now inside that you actually have this range, and this range is what it's trying to break over right now. The larger range is from here to there, and if you take that range, it's not small. We're talking about a fairly large number. And so if we just look at the numbers and see what the price points are, let's just take the numbers here. So that low is 1972 and the top is 2092. So we're talking about 120 points. 120 points on top of this on a range breakout would get you up to 2200. So we're not talking about a small move if this thing is in fact breaking out. Now it has broken. Now what you need to see is you need to see some follow through. You need to see this thing stretch away and put this in its rear view mirror. Because if it doesn't, then the probabilities of it coming back are higher. And so, anytime you see a breakout, especially after consolidation like this, you want to see that hold and extend. And that will be what you're looking for tomorrow. That's what I'll be looking for. And it's not just here, it's in this, it's in the NASDAQ composite itself, it's in the NDX getting over that high, and it's in the Russell continuing on its high. If those all happen, it's going to be pretty hard to pull this thing back. And then if you want to look inside the market, the main focal point has to be, does the SOX continue that stretch higher? Do we see the XLK break out? And can the XLF extend now that it's gotten over that bearish retest regen? If all of those, or most of those, in fact happen, then I think the odds are pretty good that you're going to see this market move back to the highs, break them, and continue to move higher. And that's where it sits tonight. Thanks for joining me. Have yourself a great night, and I'll see you next time. Good night, folks.